Welcome to The Interest. I'm Katie Jensen. It feels like the year has just begun, but here we are at the last week of March. Let's end the month on a good note and curl up by the fireplace to listen to our own Vincent Valvo serenade with his latest poetic moment in mortgage. And make sure to stick around for NMP's Mortgage Meteorology. But first, a fierce advocate against affirmative action, Edward Bloom, is attempting to dismantle diversity programs. Bloom and his group, the American Alliance for Equal Rights, successfully challenged Harvard University and led the Supreme Court to rule that affirmative action in college institutions is unconstitutional. So how does this affect the mortgage industry? Bloom told the New York Times that challenging other DEI initiatives wasn't off the table. Our own Sarah Wolak talked to the president of Arrive Home, Ty Christensen, about her perspective as a Black woman in the industry and how the Supreme Court's ruling could bleed into the financial services industry.
And so we want to live in an equal country. We want to have equitability in all things, but specifically when it comes to housing and housing insecurity, it's deeply important that we bring our minority brothers and sisters into home ownership so that they too can reap the benefits of generational wealth transfer.
The sentiment behind diversity, equity, and inclusion, or DEI efforts in the mortgage industry, is to expand opportunities for minorities. But ever since Edward Bloom's group targeted the Fearless Fund, a grant program for Black women, people in the mortgage industry have taken notice.
And the thing I really worry about specifically with the housing industry is losing the messaging that people of color really do need to be brought into the homeownership fold in order to close that racial wealth gap.
And Christensen says without proper and target messaging comes greater consequences.
That gap between the have and the have-nots will continue to widen.
Christensen also pointed out that DEI isn't meant to be exclusive, and she worries about how those crusading against DEI could harm access to home ownership.
People are going to be scared to lend to them. People are going to be scared to promote them. People are going to be scared to hire them.
Christensen says she's seen the difference in how many BIPOC borrowers apply to down payment assistance, non-traditional credit programs, or grant programs versus white borrowers.
We're turning into a brown country, and we need meaningful outreach to these communities by people that look and sound like us and people we are familiar with.
To read more about those protecting DEI in the mortgage industry, head on over to nationalmortgageprofessional.com. Reporting for The Interest, I'm Katie Jensen.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI. AI you can bank on.
In the land of loans, where money flows free, there's a tale of woe, quite the comedy. Mortgage companies, with their heads in a spin, losing money on every loan they're in. They offer deals with a smile so bright, but their balance sheets? Oh, what a sight. For every dollar lent, they seem to bleed. Their profits vanish with incredible speeds. They crunch the numbers, they run the math, but it seems their profits take a bath. With interest rates low and risks quite high, their pockets empty. Oh my. They try to recoup, they try to thrive, but it seems like they're taking a nosedive. Their executives sweat. Their shareholders groan as their losses mount. They let out a moan. But fear not, dear friends, it's not all despair, for in this chaos, there's humor to spare. Imagine the bankers pulling their hair as their profits vanish into thin air. So here's to the mortgage companies, a toast we'll raise, for turning profits into a comical maze. Though they may lose money with each loan they make, in the world of finance, it's all just a funny mistake.
Welcome back to this week's Mortgage Meteorology. We'll touch on all things to do with the overall climate of the housing market, not just in our neighborhood, but yours too. Today's forecast is a bit cloudy. Those pesky mortgage rates that heated up during February is putting a bit of a damper on Fannie Mae's expectations for the rest of the year, which in turn equals a thunderstorm for buyers. It looks like the mortgage rate storm isn't ending anytime soon. The GSE's ESR group now expects the 30-year fixed mortgage rate to end 2024 at 6.4%, which is up from the 5.9% predicted in January's forecast. Despite the cloudy weather looming over the 30-year fixed rate, the ESR group expects existing home sales to trend warm as the year goes on, due to increased new home listings and people still needing to move. Fannie Mae's Senior Vice President and Chief Economist Doug Duncan cited hotter-than-expected inflation data and strong payroll numbers as two things that likely will place some upward pressure on mortgage rates. Meanwhile, home price growth is finally back to where it was before the pandemic, according to a new report from Redfin. This follows a 3-year roller coaster ride in which prices sweltered when ultra-low mortgage rates fueled a home buying frenzy and cooled when rates jumped, due to the Federal Reserve's effort to quell inflation. U.S. home prices climbed 0.6% from a month earlier in February, on par with the average monthly gain in the roughly 8 years leading up to the pandemic. Prices ebbed and flowed during the pandemic, rising as much as 2% month over month in January 2022, and falling by as much as 0.2% in August of the same year. Home prices fell from a month earlier in 6 of the 50 most populous U.S. metropolitan areas, many of which were pandemic boom towns that have since seen their housing market temperatures drop. Places like Tampa, Florida, San Antonio, Texas, and Charlotte, North Carolina all saw prices drop. Redfin says that prices are likely calm, cool, and collected in Texas and Florida, in part because those two states have been building a lot of homes, which means supply has increased. So what will become of these boomtowns? I'll keep you posted and meet you back here next week for your updated housing market barometer.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.